بسم الله الرحمن الرحيم. الحمد لله رب العالمين، والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. We need to understand the issue of stock or share trading. What are the shares? The shares, from the Islamic point of view, represent the real assets minus real liability of a company. And if you own a share in a company, in fact, you own part of the machines, part of the goods, part of the debts, part of the cash, part of the building if there are buildings, and you owe part of the liabilities in as much as there are numbers of shares in the market. So the owners, all of them, own this company together. This has important implication. That is, if you sell a share, what are you selling? You are selling a composite of things, including debts and cash. But this composite has an objective and makes one unit together. Indivisible. All together is one unit because all of them are put together for that objective. Of course, minus the liabilities. Can this be sold? Yes. If you own a share, you can sell a share. You can go to the market, buy a share. And buying and selling a share is a useful thing, rather, is a thing you contribute to the production in the economy. Of course, when you buy a share at the initial establishment of the company, what they call IPOs, or same thing, when a company is expanding and issuing new shares to expand, you are contributing to the development of the economy. But when you buy a share, what they call from the secondary market, then you are replacing another owner because the previous owner needs to liquidate his asset for whatever objective that he has, which is permissible, of course. So you can buy share and sell share. But can you buy and sell every share or not? Let's look at it here. When you buy a share, you become partner in the company. Now, if the company does wrong things, then the management is doing this wrong in your name and on your behalf. And you are part of it then, because you are actually, by buying the share and owning part of the company, you are authorizing the management to act on your behalf. So if the management made a party in which it serves liquor, that is haram, definitely. And if it does that a lot, that becomes a lot more haram. Take another example. If the company itself makes something that is haram, that is even worse. So you cannot, in other words, buy or sell a share of a company whose main line of business is not permissible in Sharia. Example, production of liquor or production of bad movies in Hollywood, or production of bad publications. There are many bad publications in the world. That is also haram. Or simply conventional bank. The conventional bank, the main line of its business is to take loans and give loans on interest. That work is haram. So you cannot buy a share of any of these kind of companies. Now, of course, when you go beyond that, okay, well, there are companies that are mixed. The main line of business is not haram, but there may be other conditions. It does a lot of haram. It does a lot of parties, for instance, in which it serves alcohol. receptions and parties, or it has a subsidy that is big subsidy relative to the main company, and that subsidy is involved in haram, a banking subsidy, for instance. It is a holding company and it has a banking subsidy. Then you really need to add other criteria to the issue of whether it is permissible to buy a share or not. These criteria are financial criteria. If it is involved too much in the haram, definitely it becomes haram. Essentially, even if it is involved a little bit in haram, it is not permissible. But because of the concept of the tolerance that we have in Sharia, you know, in Sharia we have a concept that is very, very important, that when things become tight too much, there ought to be easiness. There ought to be solution to make life easy. Because Sharia came from Allah subhanahu wa ta'ala to make life easy and better, to improve human life, not to make it difficult for people to live, not to make it difficult for people to invest. So if you are, for instance, in the American market, and the American market has not a single company that does no haram at all, and if you live there and you invest there, then you are and you want to live as a Muslim, we tell you, okay, select the least haram. Selecting the least haram by applying these criteria. Criteria number one, main line of business, that we reject completely. Criteria number two, the financial criteria. Does this company do a lot of haram or a little of haram? Does it earn, for instance, an airline company, the main line of business is permissible, but it serves alcohol. Does alcohol serving makes big chunk of its profit or of its revenue, or it's very small, negligible part? If it is negligible, you can tolerate that. Doesn't mean that makes it halal. You can tolerate it, and when you tolerate some haram, you have to give that much haram to charity. You don't keep it to yourself, because it dirtied. It makes your halal dirty. It makes your halal mixed with haram. You have to give it for charity, so you purify your property itself and your profit. So you apply then the least. And here things differ from market to market. For instance, we studied the market in Qatar. In Qatar, you don't need to tolerate any company that does a little bit haram, because there are in Qatar about 1/3 of the total market, total companies that are listed in the stock market are all making halal transactions, and they have Sharia board that advise them, or Sharia advisors, and they commit themselves to not to make any haram. And that is enough. These companies are distributed in different sectors, so it doesn't make any really any difficulty or any inconvenience to the Muslim investor. Whereas in the Turkish economy, in the Turkish Borsa of Istanbul, well, there are many companies that have this mix. Only very, very few companies, like Islamic banks only, that have halal completely. You can freely invest in them, like Al Baraka Bank, for instance, or any other bank that is listed. Unfortunately, for instance, the Katilim Waqf Bank and the Katilim Zira'a Bank, which behave as Islamic, but these are they are not independent from the main banks, Zira'a Bank and Awqaf Bank. And the main banks are conventional. So the Islamic part is a small part inside the bank. It's not independent. It doesn't have its shares alone. You cannot buy the share of the Waqf Katilim or Katilim Zira'a. So this means that there are little in the market here, and then you need to apply the tolerance principle along with the purification principle. There is one point left. I want to make it clear. The share cannot be lent. Why? And you cannot sell the share on future delivery, like payment now and make delivery later. Why can't you do that? Because the share represents only the real assets at that moment. And these real assets vary from one day to another, I mean, in every company. So when you want to pay back what you borrowed, or when you want to deliver what you sold, you are delivering something different, not the same thing that you buy. This is unlike the capitalist system. In capitalist system, they consider the share equal to the share regardless of the time. No, the share in Sharia represents the real assets minus real liabilities. Walhamdulillahi Rabbil Alameen.